Hey guys, it's David-InvestQ. And what if I told you I just got off a phone call with none other than the CEO of Castellum CTM, Glen Ives. Now, Castellum CTM currently trading on the day at 70 cents, up almost 3%, and Claude has 1 year bullish projections at 85 cents. And a few things that we talked about is he directly addressed the falling share price. We talked about insider buying, acquisitions, and his goals of trying to get the stock on the Russell 2000 ETF, and even futuristic defense technology that could completely change how the Navy operates. And honestly, some of the things he said surprised me. Today, I'm going to be breaking down the biggest takeaways from that conversation, what management seems focused on right now, and why this could matter for CTM investors moving forward. And remember, none of this is financial advice. These are simply my notes and interpretations from the discussion. And if you do enjoy videos like this, please feel free to hit the like and subscribe button and comment below what it is you want to see in future upcoming videos. Now, the first topic that we're going to be discussing when it comes to Castellum CTM is one thing that Glenn made clear right away. And he said this, that nobody is more frustrated with the share price than he is. That's how he feels. And honestly, he sounded genuinely apologetic to the shareholders that do believe in the company. Not apologetic for the fact that he thinks that the stock or that the company is failing or that he thinks that the company is bad, but he just feels apologetic because he understands that there's lots of investors that feel that this stock should be valued at a higher price than what it is right now. And he understands and empathizes with the frustration that the shareholders could be feeling right now if you are holding long-term Castellum CTM. And obviously management can say that, but what stood out to me was the explanation he gave regarding the investor base when the company uplisted. According to Glenn, in our conversation, CTM attracted a lot of short-term traders and penny flippers, looking for quick momentum moves rather than long-term institutional investors that understand government contracting and defense businesses and really believe in the company. If you enjoy my content, please hit the like and subscribe button. And if you ever need help making better decisions with investing, simply take a look at the first link below to get access to my community and support yourself with like-minded investors and get access to the world's leading AI models, Claude, Gemini, OpenAI, and Grok. Get all of this software for $7 in my community, and my community is free. And obviously that's important because defense companies usually trade very differently than hype stocks, and these businesses often take time to scale, contracts, building recurring relationships, and establishing credibility. He specifically emphasized that Castellum wants long-term institutional investors who understand defense and government contracts, and shareholders willing to tolerate volatility while the company scales. And in his opinion, the real way to fix the stock price isn't through hype, but it's improving the actual business fundamentals. Now, the next thing we're going to be talking about is none other than the IR firm that they hired, which is the Equity Group, which is a big topic of discussion among shareholders. And I asked him about it, and this was interesting because Glenn actually told me, funny story, he had to push back the meeting about 30 minutes because he was in a meeting with the Equity Group talking about developing and fixing things in the website, which a lot of people and shareholders have been saying is a big point of contention and how they need to get things updated. So what that shows me is that they're taking action right now to get that resolved. And I just found that kind of funny that he was late, that he had to push back the meeting because of a meeting he was in with the IR firm about the website. So just found it funny. And right now, they're actively working on changes right now. And some of the key points is the agreement with the equity firm is month to month. So to be clear, if the Equity Group or Castellum feel that it's not a good relationship for them, they can end their relationship anytime after the month has gone by, because again, they don't have like a long-term contract where they have to stay with each other for years and years. It's a month-to-month basis, to make that clear. And the IR firm helped organize the annual shareholder meeting. So the shareholder meeting that a lot of people did like and they felt was very professional, that was because of the equity group. They were the ones that were in charge of formatting everything to make it look very good. And management plans to spend the next 4 to 6 weeks to build out a larger roadmap for the company to really address the PR issues. So let's see what will be happening, and hopefully maybe I could get another call on him within the next 4 to 6 weeks to get an update in regards to the roadmap for Castellum CTM and the equity group and how their relationship is evolving. And another thing he repeatedly emphasized, he said this a lot, he wants to get on the Russell 2000. He wants to get Castellum CTM there. And that seems to be a very important long-term objective for management, because if a company eventually gets added to the indexes like the Russell 2000, it can increase institutional visibility and potentially attract more real serious investors. And he also mentioned wanting future shareholder meetings to be more engaging and interactive. And apparently somebody attended, and one thing that he was also happy about, because there's been improvements with the annual shareholder meeting, because as I just mentioned, the IR firm was responsible for making it look so professional, so good, and formatting it the way they did. And I don't know if you saw this, and I don't wish to talk bad about any company, but Redwire, they also did an annual shareholder meeting the day after. I did a live stream on that. It was very short. They saw that all the votes were put in, there was no Q&A, and they had a very short script, and they just ended the annual shareholder meeting right there. It took less than 5 minutes, about 5 minutes, give or take. And Glenn told me that when he first started, and he was just he was at the company, and he was just simply a consultant. The annual shareholder meetings were the exact same way that I'm describing happened with Redwire. And the first thing that he told me, he said, was, what did I even accomplish? So the IR firm, the equity group, did improve that, because again, they want people to see them as a good company. They want to be able to put a name to the face, and they want to be able to see what the company actually does. And they want, in my opinion, if you didn't hear about Castellum CTM and you saw the annual shareholder meeting, you're going to think that this is a legit company and they're real professionals. And also, he told me that they plan to actually put a visual live stream or some type of video when they do the annual shareholders meeting, so that people can actually put a name to the face when they do the annual shareholders meeting next year. And the next thing was a question. One of the biggest questions that was asked from subscribers and people in the Discord community was about share buybacks. And I like this answer because it was very good, and it really shows how they're thinking as a company and how Glenn is thinking as a CEO, and why it helps me, again, do what you want with your own capital, but it helped me believe more in the company, that this is a good company. And a lot of investors were asking, if the stock is undervalued, why not just buy back shares? And Glenn's answer was, pretty nuanced, and it was pretty good. And he said buybacks can make sense depending on a few factors and a few variables. And it's a company to company basis. It's not necessarily a one size fit all, because it can vary depending on the size of a company, the debt levels, how much debt they have at the moment, cash flow, and the overall business situation of the company. But right now, management and Glenn believes the best way to create shareholder value is scaling revenue and profitability. He repeatedly stressed growing the business is what ultimately will fix the stock price. Instead of using cash for buybacks, they currently want to use capital in ways that are accretive to growth, meaning acquisitions, contract growth, scaling operations, and expanding revenue. And he said that it's better for him to use his capital instead of just buying shares of the company. It's better to, I'm going a little on a tangent. I'm going to be talking about that in a little bit in relating to insider buying. So I confuse that up a little bit with share buybacks and insider buying. But I'll get back to what I was just about to say. But he also said that CTM is a relatively small company, and management is focused on reaching over $100 million in annual revenue. And another thing that stood out to me is that he mentioned the company now has a healthy balance sheet with essentially no debt compared to where things were before. And he even compared M&A, mergers and acquisitions, to Tom Brady throwing Gronkowski for a huge play, throwing a pass down the field and having a huge 80-yard, an 80-yard reception. He catches it 30 yards down the line and he takes that thing all the way to the end zone. And that analogy, what it means is that they have their ground game and they do the things that pushes them down the field, and it's something that is not a big play, but it's one after another. And they take the running back and they go down the field about 4 yards. They get pushed back 2. They go down another 6. They have an 8-yard run, a 4-yard pass. They get sacked. Then another 6-yard pass, a 7-yard run, and then once they have a breakout moment, like Tom Brady just throws the ball to Gronkowski 50 yards down the field, and then he takes it down the end zone for an 80-yard reception. That's basically what that acquisition can do for them and take them from the 60 million revenue rate that they currently have. That's currently what they have planned for the year, for the fiscal year of 2026, and it can help them take them to getting that $100 million revenue annually with a mergers and acquisition. So they believe that it's a better use of their capital to take this approach rather than just buying back shares of the company. And he also did say there's lots of temptation to do fancy things, but he wants to have discipline and stay focused on the plans they already set to grow the business appropriately with the way that they see fit. And I did agree with what he said. I did like the tone of the way he presented it in our conversation. And the next thing is in relation to insider buying and insider selling. I asked about insider alignment and insider buying because I know a lot of retail investors care about this topic, because there's been lots of posts, and when management and Glenn even himself would put out how many shares of the company they bought, and how many shares were being sold, a lot of people have been feeling discouraged, and they've been feeling discouraged because they feel that the capital they've been putting up and they've been investing into the company by buying shares is not enough to make people feel like they don't feel like it's signaling confidence, that they have actually confidence in their own company to put their money where their mouth is. And I mean this respectfully, but I'm just trying to word it in a way you'll understand, but basically put the money where their mouth is and put it in the company, buy shares of the company. And if they believe in the company, they would have no problem letting this sit out for a 5-10 year period long run, because they know the company is going to be good. It's been creating a feeling of uncertainty, and why don't they buy more shares? And I'm going to explain that right now. He explained that insider buying is management, with management putting their own money at risk along shareholders, but he also argued that sometimes that capital, instead of just buying shares, that can alternatively be used directly to grow the company itself. Now, where things get interesting, according to him, first off, he does have a pretty big position. He stated that when he came onto the company way back, just as a consultant, he's put up $250,000 of his own capital in the company. He's never sold any shares at any time throughout his whole career at Castellum CTM, and he has only added ever since then. He also stated his salary and the salary of management is in the lower 10% of executives in the defense industry. And he basically said he's not doing this purely for financial gain, and he has other reasons for why it is he loves doing what he does in the company and why he is the CEO of Castellum CTM. And whether people agree or disagree with management, I think context matters here, because according to Glenn, when he took over, the company had around $12 million in debt, limited cash, and internal operational stress. And he strongly believes today's strong stock price does not properly reflect how much stronger the business is compared to that earlier situation. And without going on too much of a tangent, again, the reason he's already, to summarize, he's bought a lot of shares of the company already. He has a big position. And the reason that you don't see bigger buy orders in the company is because they're using that they're using their own hard-earned capital to instead invest in the company in ways that helps grow the company rather than just buying shares of the company. Hopefully that makes sense. And the last section I'm going to cover, something that you may not have even heard about, but this was one of the coolest parts of the conversation in my opinion. I asked him about augmented reality style smart glasses and defense applications. And according to Glenn, The product's name is XRA, and it is absolutely an area they believe strongly in. The idea is actually pretty fascinating, and it's pretty cool. Imagine, I want you to imagine this, guys. Deployed sailors in the middle of the ocean trying to fix highly technical equipment, and they're far away. He said as far as 6,000, 7,000, 8,000 miles away from home. Now, normally, you may need to fly experts thousands of miles to assist them. That's expensive, it takes time, and during wartime, that becomes extremely difficult, sometimes damn near impossible in a way. And but with these smart glasses, sailors could potentially connect directly with experts remotely in real time. The expert could literally guide them step by step while seeing exactly what the sailor sees. And according to Glenn, this could solve up to 90% of certain technical problems remotely without physically deploying specialists. And that could potentially save time, logistics, operational costs, and improve military efficiency dramatically. And that 90% number I mentioned about how it could solve up to 90% of certain technical problems, the reason he gave that number out is because he says through his experience in the Navy and actually being out there and having experienced what it is they go through and what they have to do and the issues they can run into, he thinks that that comes from his intuition and his experience in the Navy and just overall what he understands. So I just want to make that clear because, again, he does have a deep background when it comes to the Navy. And overall, the biggest thing I personally took away from this conversation is that management seems extremely focused on scaling revenue, improving profitability, strategic acquisitions, organic growth, institutional credibility, and long-term execution, not short-term hype. Now, obviously, execution is everything, and investors are still gonna want results, and management ultimately has to prove all of this over time. But I definitely thought the conversation gave valuable insight into how Glen Ives and management are currently thinking about the future of Castellum. Let me know what your comments are down below. Do you think CTM can eventually scale into something much larger, or do you still think investors should remain cautious here? And again, I want to be clear, none of this is financial advice. If you did enjoy the video, make sure to subscribe because we are covering CTM, defense stocks, AI, quantum computing, and much more right here on InvestQ. So guys, with that being said, David-InvestQ, stay safe, keep making good decisions with your long-term portfolios, and I'll see you on the next video.